Let's check Macy's, by the way, just out with quarterly results. This one's a big stock mover to the downside. Melissa Repko is here. Melissa, good morning. And I'm reading this and go, okay, great. The earnings beat, I guess the revenue is shy. Then you get to the guidance and you're just like, what is happening here?
Hey, Kelly. Yes, I just got off the phone with Macy's CEO Jeff Gannett, and he said they are taking down the forecast because of what they saw in late March. They really saw a weakening of sales trends across the board, but especially in those discretionary categories like clothing. So Macy's beat on earnings, but it put up a disappointing result on revenue. For EPS, it reported 56 cents adjusted versus 45 cents expected. And on revenue, it missed. It reported $4.98 billion versus $5.04 billion expected. But again, what he was saying is that they're really seeing macro pressure here. We've heard from some retailers over the past few weeks that they attribute some of that to colder weather in the early spring. And he did mention that they're seeing some signs of life, he called it, in May as people are buying more of those spring categories like sundresses and things like that. But overall, he said they're taking a cautious forecast and cutting that forecast because they're nervous about what may come in the year ahead. And they really think that the macro pressures will continue, Kelly.
I mean, Melissa, to me, this comports more with what we heard from Costco, where the CEO was saying the other day that consumers are already acting like we're in a recession, that they're trading, I think, from beef to pork was the example that he chose. But when you see Macy's, which was trading at a 3.5 times earnings multiple, with the stock initially down 12%, it's well off that level now. But you go, okay, so a lot of cautiousness was already priced in. What are they picking up exactly about the consumer in the months to come? Like this just doesn't give you that sense of, retail strength at all.
One thing that's important to note is Macy's, along with including, of course, its namesake stores, has Bluemercury, which is a beauty chain, and it also has Bloomingdale's, which has a higher income consumer. And one of the things that Jeff told me is that they are also seeing those declines carry over to some of those more affluent customers. During the pandemic, as people had a little extra money, they were shopping more at luxury brands like at Bloomingdale's. But he said that aspirational customer has fallen off because they're under more pressure with their checkbook. And so that would be another factor, that they're not just seeing weakness with their department store, which skews toward a little bit of a lower income household. About half of their households at Macy's make $75,000 or less, he said. But even at Bloomingdale's, they're seeing more weakness. And that's, of course, a more concerning factor.
Absolutely. No, and it kind of makes more sense, like we were saying earlier, that Bloomingdale's would be weak. But to see Macy's with kind of, in a way, that under 75K was supposed to be a little bit stronger segment right now. That's still where we see low unemployment and everything, and not doing enough, I guess, to offset elsewhere. Melissa Repko, thanks. We'll check back in soon. We really appreciate it.